Hello friends, if you're still not certain about the potential of wind energy in India, stop for a moment to grasp a simple fact that I'm going to present to you. India's wind energy production is presently at 45 gigawatts. That's what we have been able to achieve thus far in about 2 decades. Now let this sink in. Each and every year, China increases its wind energy capacity by at least this much amount and often more. In 2023, it added 65 gigawatts of capacity. In 2022, 48 gigawatts. In 2021, 47 gigawatts. And in 2020, it was 71 gigawatts of wind energy capacity. Compare this to 1.5 to max 3 gigawatts of wind energy capacity that we have been able to add every year so far. China's total wind energy capacity exceeded 440 gigawatts in 2023 and is expected to surpass 530 gigawatts in 2024. The amount of wind power being currently produced in China, that 440 gigawatts of wind power alone is enough to meet all of India's energy needs for at least next 10 to 15 years. Again, compare this to the max 45 gigawatts of wind power we produce here in India. So what is stopping us from achieving better growth here? It's not that we lack potential here. Several studies have been conducted over the past 15 years to assess total wind potential in India. The government, through National Institute of Wind Energy, has installed over 900 wind monitoring stations all over the country and has issued wind potential maps at 50 meters, 80 meters, 100 meters, 120 meters and 150 meters above the ground level. At 80 meters hub height, the wind potential expands to an impressive 102 gigawatts, while at 100 meters it skyrockets to 302 gigawatts. A recent study indicates a gross wind power potential of 695 gigawatts at 120 meters and an astounding 1163 gigawatts, that is 1163 gigawatts at 150 meters above the ground level. These findings showcase the vast untapped wind resources available in our country. Though the potential existed, serious efforts to enhance wind energy capacity began only a couple of years ago when India declared its commitment to net zero carbon emissions by 2070. Our goal now perhaps will be to replicate some of the success that China has seen in harnessing wind power. I gave you the figures for China only to help you visualize the potentially explosive growth that the wind sector can see in the coming years here in India. It is safe to say that we are only getting started. Toward the goal of achieving net zero carbon emissions by 2070, India wants to derive 50% of its electricity needs from renewable sources by 2030. To achieve this near-term goal, the government has drawn out a plan to reach 500 gigawatts of non-fossil energy capacity by 2030, out of which 140 gigawatts will be derived from wind power and 280 gigawatts from solar. However, Union Minister for Power and New and Renewable Energy R.K. Singh has said on many occasions that as much as 65% power generation capacity would be from non-fossil fuels by 2030 and that it would be higher than the set target of 50%. In an interview, Singh said, India is likely to witness 25 gigawatts of renewable energy capacity addition in 2024 calendar year, entailing an investment of about 16.5 billion US dollars. This would be about 83% higher than the 13.5 gigawatt addition seen in 2023, with an investment of about 9 billion US dollars. No doubt, the potential for renewables is huge in coming years. To meet the targets set for renewable energy production by 2030, the central government has said they will issue tenders for 10 gigawatts of exclusive wind energy and 10 gigawatts of hybrid every year, out of which 5 gigawatt will be hybrid wind. Again, these tenders are planned to be issued every year from now until 2030. Apart from these, there are proposals from others like state governments, commercial and industrial establishments, retail and independent power producers looking for renewables power sourced from wind energy. Realistically speaking, we can expect nearly 10 gigawatts of wind energy tenders to be floated every year from now, that is from 2024 to 2030. Significant amount of this will need to be executed by the two major players in the wind energy sector here in India, Suzlon and Inox Wind. They are the ones who will benefit the most by the surge of demand for wind energy here in India. For lack of other players, these two entities have to grow exponentially to deliver on the target set by our government for the wind energy sector. Now let's see what this translates to in terms of revenue for the two firms. The gross revenue expected is around 6 crores per megawatt of wind energy executed. The revenue depends on whether the project is turnkey or equipment supply with some value added services. So assuming 10 gigawatts of tenders executed per year, this is a huge opportunity to reach upwards of 6 crores into 10 gigawatts, that is 60,000 crores of revenue generated from this business in India every year. To put this in perspective, the yearly revenue for the last fiscal year was roughly 6,000 crores for Suzlon and 1,750 crores for Inox Wind. So at present, we have only about 13% of revenue potential realized by these two firms. Hopefully these stats about opportunity in the wind sector in India helps us understand why Devansh Jain, founder of Inox Wind, says, "We have only scratched the surface of what is possible in the upcoming years. This is merely the start of a long journey ahead." In addition to the targets previously mentioned, another significant driver for the expansion of India's renewable energy sector is the growth in power demand itself. Since the COVID-19 pandemic, there has been a remarkable increase in India's power requirements. During the pandemic in 2020, the country's peak power demand was around 120 gigawatts, but this figure has nearly doubled to 216 gigawatts in 2023. The highest supply in a day, that is peak power demand, rose to 224 gigawatts in April 2024 as against 216 gigawatts in April 2023, a rise of 3.7% year over year. Over the next decade and beyond, India's power demand is expected to grow by at least 5 to 6% CAGR, with projections indicating that peak demand will exceed 366 gigawatts by 2032. India's rising power demand is fueled by strong economic growth, rapid urbanization, and government efforts to increase electricity access. The adoption of modern technologies and a growing middle class are also boosting energy use. This rising demand presents both challenges and opportunities for India. The country needs to expand its power generation capacity while focusing on cleaner energy sources to reduce its reliance on fossil fuels. It is expected that the majority of power demand in the next decade will be addressed through the addition of renewable energy capacity. Wind energy along with solar is now one of the cheapest sources of energy, costing about rupees 3 per unit, while conventional sources of energy derived from fossil fuels like coal costs about rupees 3.75 per unit, and that cost is increasing by 6 to 7 paisa per year. So renewables is no longer the subsidized source of power which is costly to purchase. Hence, unlike in the past, there is no need to subsidize wind power to help drive its wide adoption. This augurs well for players like Inox Wind and Suzlon engaged in wind energy production. Presently, wind power has no subsidy support except for interstate transmission system or ISTS charges waiver applicable up to June 2025. These charges are for using national transmission infrastructure that connects different state electrical grids. Given these large tailwinds in the wind sector, let us now look at Inox Wind as an entity and see if it is in a position to cash in on this huge opportunity. There are many things going right for Inox Wind at present. The company along with Suzlon enjoys duopoly in wind energy sector. There are only two players in India who do turnkey wind projects, Inox Wind and Suzlon. They are the two fully integrated wind energy players providing end-to-end solutions, from conception to commissioning to operation and maintenance. Turnkey solutions are attractive due to their simplicity and reduced risk for the customer, making them popular among PSUs and SMEs seeking a hassle-free experience. The easiest job is to manufacture wind turbines and supply them, but only two entities do the dirty job of acquiring land, right of ways, getting approvals, foundations, installation and maintenance, etc. There are 4 or 5 other players who just do equipment supply. Large corporations and independent power producers may prefer equipment supply over turnkey since it offers them greater flexibility and control. It appeals to those entities with the necessary expertise and desire to manage the project more closely, saving costs. The other advantage, which is exclusive to Inox Wind, is the huge project site inventory held by the company. This land bank, accumulated over a period of 10 years, is spread across multiple states and has the capacity to generate 5,000 megawatts of wind energy. They also own 1,800 megawatts of transmission infrastructure. This helps them deliver on their order book quickly within a few months, since they just have to ship and install the turbines to start supplying wind energy. Without this land bank, a project can take 2 to 3 years, since acquiring land, obtaining right of ways, getting approvals, building access roads, turbine foundations or platforms, transmission lines, etc., they all take time. No other wind energy player in India has a land bank inventory of comparable size. And as they consume part of this 5,000 megawatts capacity, Inox Wind keeps adding to the same to ensure the key moat of the firm stays. The competitive advantage is maintained. The company is in good financial position with strong backing from the Inox GFL promoter group, currently valued at $8 billion US. Inox Wind is the only A-CRISIL rated wind OEM in the Indian domain. Last when I checked, there was no other, including MNCs. At present, they do have interest-bearing debt of about 600 crores left. They are committed to becoming net debt-free in first half of fiscal year 2025, when the interest-bearing debt amount will become zero. The free cash flow for fiscal year 2025 with 800 megawatts execution should be able to pay off the existing 600 odd crores of debt, according to the management. This should help significantly improve profit margin for the firm in this fiscal year. No debt is required to run this business since the working capital is so small, about 40 to 50 crores per year. The founder Devansh Jain said recently, "We came from 3,000 odd debt to 600 crores. It's all free cash flows from here on. We are surely self-sustaining." The firm has an order book of 2.7 gigawatts presently. Unlike the situation in the last decade when the sector was driven from subsidies regime involving central government-owned power generation units and agencies, order book of wind energy players is now well diversified with a healthy mix of projects from central and state government units, retail, commercial and industrial, and independent power producers. About 25% of the present order book of Inox Wind is central or state PSU, while 70% is commercial and industrial and about 3% retail. So dependency on PSU is quite less. Inox Wind's current manufacturing capacity of 2.5 gigawatts per year positions them well to execute an order book of this size. The management expects future capacity additions to existing 2.5 gigawatts facility will require very little time and no debt. Upgrading to 5 gigawatts capacity 2 to 3 years down the line would require a modest capex of 500 to 600 crores, which can be sourced directly from the profits of the firm. This upgrade, when required, would only take few months of time and can be accommodated within the existing manufacturing hub itself. Kudos to the management of this firm for the excellent job they have done so far. Another aim of the leadership has been to be at the forefront of technology in the wind sector. While they moved completely to manufacturing 3 megawatts wind turbines in fiscal year 2024 from the old 2.x equipment, they already have acquired the technology know-how and license to build newer 4.x megawatts wind turbine. This ensures they are never left behind when the industry is ready to harness the cost effectiveness and operational efficiency of these bigger machines. As an investor, I would love to know that my money is valued and is being spent optimally to achieve business growth. Hence, it feels good when I hear a lot about how Inox Wind management is ruthless when it comes to managing costs. In almost all meetings with shareholders and media, Devansh Jain talks about the fact that they built the 2.5 gigawatts manufacturing facility by spending just 600 to 700 crores. Almost everyone else spent anywhere between 3,000 to 6,000 crores to build a facility of similar capacity. Ruthless cost cutting helped keep their debt to a minimum when other players in the wind energy sector were incurring huge debts of about 5,000, 10,000, and even 15,000 crores. When the slump hit the industry in 2017, there were more than 30 players in the wind sector here in India. The move to auctions regime from feed-in tariffs meant that margins shrunk to abysmal levels. The pandemic in 2020 was the death blow to the sector, with majority of the firms going bankrupt and or closing down. Post-COVID, the sector has recovered from the mess of the past and has now stabilized with just two major players remaining to take on the significant projects emerging in the wind energy sector. In the words of Devansh Jain, the founder, we managed to survive only because we are one of the lowest cost producers of wind turbines globally, and we are pretty lean with regards to our debt. The fact that Inox Wind survived the big storm while still retaining 53% majority share over the company shows their ability to stay resilient in crisis situations. This was possible because the company is debt averse and ruthless in cost management. To hear from Devansh Jain himself, he says, I think there are three family values which come to my mind in all our ventures. Firstly, resilience. Secondly, perseverance. And thirdly, staying away from debt. Talking about the family behind Inox Wind, honestly, I feel one of the strong points of Inox Wind is the promoter group and the management itself. They seem to have the right priorities required to run this challenging business. They have been consistent in conveying the same, in fact boringly consistent, because in almost every interview or earnings call, they emphasize the same 4 or 5 tenets of their growth. Strong balance sheet, being debt averse, being quality conscious while keeping costs very low to achieve high margins, investing wisely, and maintain the land bank moat. Additionally, I love to invest in companies whose leaders are passionate about their business. Inox Wind was started in 2009 by Devansh Jain when he was just 23-year-old. His family was urging him to focus on running existing chemicals business instead of starting a new one from scratch. He says, climate change was a subject which became extremely close to me, and I wanted to do something which would have an impact in helping achieve our climate goals. His father eventually relented, and Inox Wind was started with an initial capex of just 10 crores. However, the company grew very quickly to become the largest business of Inox GFL Group, and it remained so until the slump hit the wind sector in 2017-18. Lastly, I want to touch upon a point that was brought up in the earnings call by one of the shareholders. Some investors worry about the prospects of wind energy being eclipsed by solar. This is due to the fact that solar can be cheaper, requires less capex to get started, capacity can be developed incrementally with fewer panels deployed initially. Further, effort and cost of operations and maintenance of solar installations is very less, since there are no mechanical or moving parts. We recently had NHPC issue a statement saying that they won't take up any new wind projects because costs were higher but output was lower as compared with solar. While such instances of solar replacing the wind power may exist, general industry belief is that wind and solar will coexist since they are complementary. Wind energy generation is more during night and during rainy days, while solar output is more during the day under sunlight when the wind is less. We can utilize the grid capacity to the maximum. It can go up from 30% to 50% when this hybrid model is employed, instead of going only for solar. If we do not do this, we have the transmission infrastructure underutilized. Solar panels and wind turbines can coexist on the same piece of land, since wind power installations occupy only 2% of the wind farm area, allowing rest of the area to be used for solar panels, agriculture, plantations, etc. Sharing infrastructure such as roads, power conditioning equipment, and transmission lines can lead to significant cost savings in terms of both capital investment and ongoing operations. Thus, by combining wind and solar, we can produce more electricity from the same capacity than either technology could alone, optimizing the return on investment. Hybrid systems can provide a more reliable power supply to the grid, reducing the need for expensive battery storage or backup power systems from fossil fuels. To summarize it all, I strongly feel Inox Wind is under the right leadership and has a great future. My deep research about the company has only revealed that it is moving in the right direction and market is extremely favorable to them. In case you have missed, do have a look at my previous video on Inox Wind financials. Before investing, do your own research and make your own decision. Best of luck. Thanks for watching. Have a great day.